How's everyone doing today? Shankar P right here, and today we're going to dive into the charts and see where Bitcoin and the rest of the market will be heading. Remember, I'm not a financial advisor, so all this information is just for entertainment purposes only. So without further ado, let's dive right into the charts. All right, guys, so right here I have the S&P 500 in 2000 and I think this, 2006. So in about 2006, I don't have it marked here on this chart. We had the yield invert, and I'm bringing this up again just because, you know, we did have the FOMC meeting that just happened, and I just want to bring this to your attention of what is currently happening. Now, me personally, I don't trade based off of news. I look at the charts, and what is happening in the charts is normally how I will be taking my trades. 1 minute. Let me just get the moving indicator here properly. Moving average. Okay, there we go. Let's just bolden it up a little bit. 200 day. Okay, so yes, so right here we have 2008 price came down, right? Broke out of this channel, came back down for the retest, and then we had that last rally. And mind you, the yield curve inverted somewhere back over here. So we had the yield invert somewhere in this area, and I could pull it up later and show you. But the reason why I'm bringing up this chart and I have this circled, because this is potentially where we could be in the market cycle. So if we go over here, you can look in where we are now in 2022, that we've broken out, had a retest, and now it looks like we're printing a reversal candle. So this is a bullish engulfing candle at the moment. So that's what we currently have after the FOMC meeting that said we're going to be increasing basis points by increasing the interest rates by 50 basis points. Right, so concerns for me at the moment for this is currently the 200-day moving average. So we're not out of the woods yet, so we need to break above this 200-day moving average and not use it as resistance. So as you can see in 2006, we were underneath the moving average. It looked like we were going to get rejected, but we didn't. We did get rejected, and then we headed higher, made a higher low, and headed higher. So currently, that's what we're anticipating. We're waiting to see. So currently, we're here in the market, which I believe we're currently at a similar position, where, you know, if the price gets rejected and makes a lower high, then, you know, might be the start of a real serious bear market. But if not, and we come on top and hold it, then we would have our last leg in the bull run. So that is, you know, where we're at right now. We've formed this bottom, so we've had this bottom here. It's literally looks like the exact same price structure. However, it's just a bit elongated, looks a bit bigger in my opinion. You know, but it's the exact same. We had the 200-day moving average. We were underneath it, broke out of the bull flag, tested. So all we did was come down and test this bull flag right here. The yield curve inverted, and yield curves inverted. You know, so we'll see what happens with that. But this is just very important for us to understand, because the S&P and Bitcoin has definitely been moving side by side in the last, you know, especially the last 6 months. Okay, so what we have here now is the USDT dominance. So normally when the dominance gets up to this level, up here, especially for the cycle, Bitcoin, it normally breaks down and Bitcoin goes for a rally. So what we have been saying on this channel, what we're anticipating, is that what we're anticipating is that we will come down. So I'll just draw a rough. Come down to at least this zone again before we end this bull run. So we're anticipating to at least come down here. We could break down and have, and then we'd have other support zones. Would be, we could come down to there, could come down to here, and we could also come down all the way down here. So it's definitely a possibility, but we're at least anticipating a drop to this level here before the cycle is over. And what I'll do is I'll overlay the Bitcoin chart if I can find, so BTC. So you can see exactly how they're inversely correlated. See here, when the price is up here, when the price was down here forming the bottom, when we were at the bottom, the USDT dominance was at the resistance here and broke down, and Bitcoin rallied to the 69k level. Even here when we had this rally over here, Bitcoin was here, broke down. So currently we are again at the top of this point right here at resistance, and so we're anticipating a breakdown at minimum, right? So that's what we're anticipating. Again, this is a bullish pattern, so if it does break up, Bitcoin would completely be crushed, but just on the last 2 times it's touched and it's got rejected, if we do get rejected again, we can anticipate higher prices for Bitcoin and the altcoin market, right? So that's something that I wanted to bring up to show you guys. Right? So that's what we're anticipating. Let's go to the Bitcoin dominance. So currently the Bitcoin dominance, we currently have a bearish divergence here. So we currently have this bearish divergence, and normally with this bearish divergence that we currently have, this is a hidden bearish divergence. So normally with a hidden bearish divergence, we expect prices to continue lower, right? So we are anticipating prices to come down. This is the dominance, the Bitcoin dominance. So we're anticipating the Bitcoin dominance to come down to, hopefully come down to this level. And this is a very important level, as at least in this cycle, it's touched and held support 3 times. So if we break underneath this, it will be very good for the altcoins, but just be careful that if we do come down here and we bounce, the initial bounce are usually pretty intense. Like we had a bounce here, and that's when a lot of the altcoin gains got washed out if you were holding any in gains, right? So just keep that in mind. I'll show you this example here. We had this bearish divergence here. We have this bearish divergence here, and so we have this bearish divergence here, and you can see the price just completely dumped. Not the dominance completely dumped, which altcoins went on a complete tear. So it was from October all the way to January, and you saw altcoins went crazy from that time. So not all altcoins did well. If you were in the right ones, you would have had a nice time during that time. So I think it was the gaming and metaverse tokens during that time. So something to keep in mind, we do have a hidden bearish divergence, which normally shows a continuation of the downtrend. So if we continue, we would break this low and head lower. But again, our major resistance or support would be here at 39% dominance. All right, so now let's look at the Bitcoin price. So Bitcoin has definitely moved up over the last 24 hours. However, so I'm going to show you 2 charts with 2 different stories of what is happening with the Bitcoin price. All right, so currently we have this bear flag that Bitcoin broke underneath. So we have this flag And mind you, these are both on the daily. Bitcoin broke underneath. So what you're looking at is we currently have to break back into this and avoid a bearish retest for further downside. Okay, so that is one chart on the daily where we're in this bear flag and we broke down, right? If we break back into the pattern, that would be very good for the price. But if we have a bearish retest, our targets would be around 35k, right? So that's one chart I want you guys to look at. And what we have here on this chart is we have a inverse head and shoulders, same time frame on the daily time frame. And just to show you, we have the left shoulder, the head, and somewhat, we have the right shoulder right there. Okay, and then we have the neckline. So this is the neckline right here. So that is, a bullish pattern right there. And just to show you it's the same Bitcoin chart, we can draw the bear flag right here. So you can draw the bear flag right there, right? So, and in this scenario that we've broken out of the inverse head and shoulders and we are testing the neckline. So that is, another view of it. My only concern about this inverse head and shoulders is on the breakout of the neckline. We didn't have any volume down here confirming that it was a breakout, and people were watching this, and it holds that much weight, right? So that's just my only concern there, is that when you look on the chart here, but I guess I am using the Binance.us, so the volume there is a bit lower. So those are two charts and two scenarios. If we break back into this bull flag, this will be, for me, a lot more valid. If we do actually have a bearish retest and head lower, I wouldn't consider this to be a valid bullish pattern. Well, it is a bullish pattern, but I would consider it to be more of a failed structure than anything. And then if we break in and head higher, this would be valid, right? So if we take it from the neckline, roughly measure it, we can say our target would be around 59k. So say 58k around there, right? So those are two charts, and I want to show you these two because a lot of individuals, when they're charting, especially YouTubers, they just show one setup, and this is the only one. But as you can see, we have a bear flag, and some people also would see an inverse head and shoulders. So now it's up to us to decide. Right now, they're both essentially valid, and they're both retesting, where this one is retesting the neckline, hoping to have a bullish continuation, and this one broke down, and it's it may have a bearish retest. So they're both retesting, and then once we get that retest confirmation, so if it's here, you could enter your positions maybe here, and again for here, you can enter your positions around this level right here, right? So it's just to see which one is going to be valid, but at least you have both visuals, and you can understand that if the price comes up and then heads down, why is that. It's completing the bear flag, the bearish retest of the bear flag, right? So nothing to panic about, everything's good. We have two scenarios. S&P 500, it's looking like we are going to be having our last melt up phase. And again, if you look at the BLX, we are still here on this channel anticipating the last wave of this market cycle, right? So using the Elliott wave theory, we are still anticipating the last wave of the cycle. So if we use the Elliott wave theory, so we have the wave 1, 2, 3 is always the longest wave. We have the 4 corrective wave, and then we are anticipating 5 to finish around 100 and maybe 180K, at minimum 170, around 100. I mean, we're anticipating about 170K, but at minimum 75,000 for a top. All right, so thank you so much, guys. I do appreciate you watching this channel. Please like, comment, share, subscribe, and tune in next time for the next video of Bitcoin and altcoins, so you can be equipped and understand and navigate these markets. Thank you so much. Enjoy.